So if you're looking for a simple entry model to enter within the market, you can use the order block entry model. It's very simple, very effective. You know, nothing too hard, nothing too complicated. It's just pretty straightforward, right? So the whole concept or theory behind an order block is this is where these financial institutions such as banks, hedge funds are looking to enter within the market. These are the points of interest that they're looking at so they can enter within the market, right? So that's just the basic concept behind an order block. It's rebranded across the trading industry such as supply and demand. It's pretty much the same thing. It's just rebranded concepts, but it's a very effective trading strategy, the order block. So I'm going to show you how to identify an order block, how to enter and exit. It's just pretty straightforward, and what to look for within the order block to make it very effective. Alright guys, so the first thing first, how to identify it. So an order block you want to identify is the last opposite candle before the impulsive move or change within the market, right? So that is how we're going to look for the order block. So as we can see right here at this section right here, right, we were in a downtrend coming down. However, it started to move up within the uptrend, right? So what we're gonna do is that we're gonna highlight the last opposite candle before the change in direction, right? So we're gonna highlight it. Look for your rectangle, and you wanna highlight the last opposite candle, right? From the top of the wick to the bottom of the wick, and you wanna drag it out, just like that, right? So this is how we're gonna identify our order block. It's pretty straightforward, nothing too hard, right? So what are some of the key components we want to see within our order block? We want to see things such as a break of structure, an impulse move, which can be referred to as an imbalance or fair value gap, right? So basically our breakout structure would be our change of character would be when the market changes its direction. So we can see it was in a downtrend, and it changes its direction going in an uptrend, right? So we're gonna take our line and we're just gonna highlight it because it broke structure right here. We can label this BOS as breakout structure, right? Breakout structure, we can label this order block, or you can even say point of interest. It all depends. So we have an order block, breakout structure, right? And then we saw that impulsive move right here. This right here, the impulsive move would be our fair value gap or imbalance. So once the order block has an impulsive move, then we know that is a pretty strong order block because it has that fair value gap within inside of it, right? So we're gonna take back our triangle, our rectangle tool, sorry, right, and just highlight the imbalance, that strong move, and we can name it fair value gap or FVG, right? And once we have that, that confirms our order block. So that's just a pretty straightforward how we can identify the order block, right? A breakout structure, a fair value gap that confirms that the order block is valid or strong. Okay, and what do we see when price reaches back into the order block? As soon as price taps into the order block, it instantly goes all the way up from moving down to up instantly. So if you were looking to enter, right, you can go for a 1-to-1, a 1-to-2, depending on your risk to reward right here, easily, right? Easily. and you put your stop loss right below the order block, right below the order block, and then your take profit can be at a next high, right? And that's a simple 1-to-1 or 1-to-2, pretty straightforward concept, pretty straightforward strategy, right? What I like to do within the order block some of the time is just aim for a previous high for my take profit, right? So I'll aim for a previous high. My previous high could have been like right here, right? And if I go all the way out, you can see where price actually did touch this high, and that's pretty much it, and I would be literally out of the trade. So as you can see, it's a pretty effective strategy, pretty straightforward strategy, and this is what I really like about it. It doesn't take that long to learn, and all you have to do is just back test it over and over to get this data to validate it, right? We're going to look for some more entries on this order block. Alright, so we can go to like the current price, right? So can go to the current price, right? So we have where the price was slightly in an uptrend, right here, slightly in an uptrend or consolidating, right? But what do we realize? That price broke structure right here, so therefore we can confirm that it was in a consolidation stage, right? And then it broke out of that consolidation stage and started to sell off. So we can go ahead now and just highlight this order block, look for confirmations to make sure that the order block is valid, right? So we go ahead and do that right now. So first thing first, look for a breakout structure. We have a breakout structure right here. It broke that low, so we're gonna label this our breakout structure, BOS, right? Breakout structure. It broke that structure, and remember the order block is the last opposite candle within the movement, right? It's the last opposite candle within the movement, right? So in order to get this more perfect or refined, because we have this breakout structure right here, can extend it all the way out here as well, we can look for that impulsive sell-off. So the first impulsive sell-off I see was right here. This would be my first impulse, because it's the last opposite candle before the impulse. We saw it drop down at this level, so that's what I'm going to be looking for, right? And we can see where price tapped into the order block right there, and then it continued to sell off. But we're going to drag it out to see exactly how it looks. Boom, just like that. Pretty straightforward. We're going to look for the imbalance as well. We have multiple imbalance that confirms this, multiple guys. So we can go back to the triangle tool, right? There's one imbalance, fair value gap, FVG, right? We have a next one right here as well, here to here within the order block at this level. Let me change the color so you can see. Yeah, we have that one right there as well, right? So this is our order block. Okay, right? FVG, fair value gap, or imbalance, right? So this confirms that it's a valid order block, and once we see where price taps in at this level, it's sold off. And as I said, if you're a beginner, you can use this entry model because it's pretty effective, stop loss right at that level, and you take profit. You can look for easy 1-to-1, 1-to-2. It all depends on your trading strategy, trading method, but You don't want to shoot for the moon and end up letting the trade reverse and then hit your stop loss. You want to take profit. You always want to try to take partials within this game because you can't really leave money on the table like that, right? And we see how your price went into the order block right here, and it sold off pretty much. So as you guys can see, it's a pretty effective clear cut strategy. We saw where price sold off with these impulsive candles, multiple fair value gaps that so multiple fair value gaps that confirm that is a strong zone. We saw where as price tapped into the order block, it immediately sold off, right? And if you are a beginner trader, you know you're aiming for that 1 to 1, that 1 to 2, you're scalping, you want to be in and out quick as fast. This is a very strong and effective trading strategy, guys. Yeah, so make sure you guys incorporate it into your strategy. If you're looking for a strategy, it's a very effective one. Thanks, man.